Morning, everybody.
Good morning.
Morning, Troy. Good morning, Matt. Good morning, everybody.
Good morning.
You guys doing okay on this Tariff Wednesday?
Tariff Wednesday.
Preceded by Tariff Tuesday and then Tariff Monday.
Like here's a big picture question. Is there a technical definition of a crash? And like we're there, right? Like this is officially, have we broken whatever technical definition people use for a market crash? Does anybody know that?
I don't know. I know we're right at 20%, right?
Yeah.
20%.
More than that off the highs, I think. But yeah, I think for the year we're at
that's what I meant. Yeah, for the year, like 20%, almost. When I looked a few minutes ago, it was pretty close to 20. I mean, it's starting to feel just the panic a little bit in the VIX, but like as Troy mentioned when we were talking off the air, you would think the SPX or the futures would be down more. That it's down 90 points or something.
I mean, that's half of what it was yesterday in the opposite direction, right? The 100-point candles will continue until morale improves, Dan.
Yes.
So we're at 79 points. It's probably got to get to 100 first before morale improves.
Well, and again, I'm staring at VIX thinking, yesterday we touched 36. We're going to open up around 56.
Yeah.
So if that's not, and especially when tomorrow, I mean, let's see. I just see Trump and what's his president? Do you say Z or how do you say it?
Yeah, President Xi, I think.
Xi.
Xi Jinping.
Troy, you're the Chinese expert here.
Yeah, good luck. If I'm the Chinese,
Troy is the optional mega linguist. Yeah.
But don't you think? I mean, when you get two strong-willed people here, what do you think? Could we get up? All right, tomorrow Trump will say, "All right, I'll raise you. I'll raise another 50." Then he raises at 50. What can we get up to? About 500% tariffs before maybe their advisors say, "Why don't you sit down and have a cup of tea or a cup?"
Just listen.
I mean, it's all percent based. The pen that cost 5 cents from Temu now costs 25 cents from Temu, and somebody will still resell it for $1.97. Big margin hit, but
yeah.
Listen, the point of all this is, when times are good, everybody wants to sing these pop songs. When times are bad, you need to go to Chicago and you need to just hit
it with blues.
Your back. Troy's dreaming big like LeBron. Matt's back testing like a daddy Mac. Dan's 30 years got our way, trading life and markets every day. Rusty's chained to the mines, digging deep day by day. But when features, he's free to come out and play option. Omega, you're trading home, where every move makes you feel less alone.
We can make fun of Trump. We can do all these things. We can make fun of the tariffs and the damage it's causing. But I think it's important to look at the big picture of what he's trying to do. He's trying to bring jobs back to America. And I found what the future is going to be for us.
Hit it.
Yeah, this is a good, let me see here. A good. I mean, that's the dream. That's the dream, right?
Well,
That is nuclear grade memeing right there, to be
It
honest.
really,
Yeah,
it
it
really,
is.
it really is.
Was that made on DeepSeek or Claude or
who knows?
Midjourney is the question.
Probably, yeah, probably some Chinese secret AI that we don't know
that is
about.
incredible.
So, listen, guys. I mean, here's the thing: you can look at this market, and there's people who would say this is an untradeable market, and I think there's probably an argument to be made for that to some extent.
Yeah.
But then Matt and I were riding around in Knoxville yesterday, and Matt's still automating his trades, going hard in the paint. And Matt was absolutely automation was crushing it yesterday. So, Matt, can you speak to some of the stuff you're doing, and what are you seeing working right now?
Well, so I have traded a couple styles of trades for a few years and have been basically exclusively automating for the better part of a year. And right, a lot of my trades have just a very basic technical condition, an RSI or an SMA, just to eliminate like the extreme times of doing something. And we're in one of those extreme times. So a lot of my stuff is not firing by design. And one of the only things that's firing is a slew of double calendars. And there are all types of double calendars. So yeah, like there's time periods when people trade double calendars, they're at the money double calendars. That's not what I'm talking about here. These are farther out of the money. And here's the concept. Double calendars have had a really rough 6 months in general. A lot of people in the community seem to have stopped trading them, gone away from them or whatever. During the run up to the election, there were times when you would put them on and literally saw losses like had not been seen in over 5 years. Like you would have to go back to like 2016 to find losses like this. And what's happening now is that they're visiting the other end of the spectrum. Like the idea that everything that can happen to a double calendar will happen. And last fall, the really bad things were happening. And now with the vol ramping, kind of unseen things are happening on the other side. So the calendars that I have on are very green in a way that I haven't seen in years. And they're very, very expensive. And these huge intraday swings, yesterday we opened up and they were at the top end of the range, even with, 500 point widths or whatever. And they got to the top point of the range and they were green, and we drop to the bottom end of the range and they're even greener now. So it's because there's, as you say, Dan, there's only a couple things you can do with calendars. There's only really two ways to win, 2 ways to lose. And so with vol being so sticky and ramping and time decaying on the shorts, that's the double calendar, that's home field advantage during the World Series. So yeah, you're doing good.
Yeah, I think yesterday in the world of double calendars or any strategy, when you think of the phrase perfect storm, we open up yesterday. So VIX,
a lot.
The happy days are here again. VIX is down 10. We're at 36 or 37. So my guess is, just my guess, when your double calendars hit yesterday at the open, VIX was probably, even though the SPX was up, VIX was 37, 38.
Yeah, it was sub 40. It was right after we got done with the show. And
so now you're sub 40 double calendar. You're behind the steering wheel of this double calendar. SPX goes south. VIX goes up 15 points.
Yeah.
And like you mentioned, you weren't even at the short strike.
Right.
So I think yesterday, just before people go out and sell their house, their wife, and their kids and do double calendars today, right? I mean, that was they've been working because the vols stayed up, right? The vol has stayed up, and your break evens are
they're very generous. And this is not, none of this, as the disclaimer says, this is not financial advice.
Oh yeah,
we're three dudes talking. But here's what I would say, Dan.
Yeah.
Like, to double down on your point of like a note of caution here. If you're in a double calendar is an extremely advanced strategy, and they're like magnets. Like they're hard to understand. And
Most mixed month spreads are. Yeah, that's a good, because the different implied volatility.
Right.
Yeah.
And so this is just a question of, do you really want, if you're not somebody who's very experienced with this type of strategy, is an environment that's an extreme outlier environment the best time to learn a strategy that you're not previously comfortable with? And that's just a question people should ask themselves. And the answer that a lot of folks would probably give is probably you don't want to learn a strategy like that during an extreme outlier environment. So one of the things Troy and I have kicked around is like, hey, like, if people are looking for discretionary plays, like what are some structures that make sense discretionarily where your losses are limited? And we were kicking around the idea of broken wing upside and downside butterflies, to where if you have a discretionary take, you break the wing in that direction, you have a debit, you have a fixed loss, you can buy these, I say relatively cheap, but you can probably buy a 20 wide that has 30 in your direction, a couple points out of the money for $1 or $2. And, that's the kind of strategy that, if it's fixed with, your risk is limited. You can, like, those are the kind of things that are interesting to kind of watch the Greeks work and how they respond to the market moves. Again, I don't know what we're down now. It was about 80 before, but yeah, the 100-point candles, they will continue until morale improves.
It's good. And that's why I think like you said, for directional shots, you think about a $6,000 vehicle. I was thinking a $6,000 vehicle at SPX. I have to rephrase that.
$5,000.
We're about 4,900 or 5,000.
$4,000.
The fact that you can go in a $5,000 vehicle and do these vertical, 5, 10 wide vertical spreads, or broken wing, or balanced butterfly shots, little ones, for $300, $400, cheap shots is I think the way to do it. I want 2 quick points. One, when you're talking about mixed month spreads, I think it's a good opportunity, even if you paper trade, because what I think, if you really want to learn mixed month spreads, whether it be calendars, double calendars, diagonals, price movement you could see, but you need to write down at the beginning of the trade, what was the implied volatility of your long and shorts when you started, and what's the implied volatility in your long and shorts when you finish. And that way you can get a good understanding of what the heck's going on and what is vague. And I think that's the only way that I ever learned them. The lazy way to do it is just say, well, VIX is up, I should make money.
Sure.
VIX is down, I should lose money. But I found that many times VIX would be up,
right,
and I'd lose money on my long Vega trade. The other thing I was going to say is, this type of market is just your classic two-way. If you said to me, VIX is going to open at 54, what do you think of VIX? I would be like, I would do the classic, that commercial with the Italian guy speaking out of both sides of them. How you doing? No, how you doing? How you doing? How you doing? But I would say, I think if somebody said, I'm going to go out and buy a put, or a put vertical debit spread in VIX, cheap, right? You can do it very cheap. And I'm going to bet that, I'm going to go out 60 days. And I think the VIX, I'll have a shot that the VIX will be lower than currently at 54 in the next 60 days. I think he'll win. And he'll have a winner in there. But if you said to me, Dan, I have some puts, and I think we're going up to 60 or 65 or 70, I think you'll win too, right? And in other words, it's both sides can win. And what you've seen in this kind of market is, I'll tell you, I had an Iron Condor and I put on last week when or week, whatever, and we were just getting killed. And this thing got so far out of the money, I didn't manage it according to my normal Iron Condor rules. It was like, because I had a month left, I had already got pretty tagged on it, right? But I just figured, you know what? We have another month. And so yesterday gave an opportunity to get out at a small loss, versus I was maybe down 40% and I got out at 7%. And it's just, I think the thing is focus. The easy thing to say is, I'm not going to look at anything. I'm going to hide. But what a wonderful opportunity. Pull up trades on your, modeling and your back testing. Pull up trades. See what they're doing. See what's different about a trade here. And if you can do a cheap, something cheap and you understand it to find risk, I think this is a great opportunity to learn. Now, you could do paper trade if you don't have much experience, but I think Matt and Troy were talking about these $300 or $400, $500, and you can make, you think about it from yesterday's high to the low yesterday, 300-400 points. So people were doing, people are doing little things that do pretty well. Anyways,
I think. Can you see real quick? I'll show you what I did overnight, and I don't like it, but I'll just show you what I did overnight. Can you see that?
Yeah, it's a nice visual.
Yep.
Yeah. So I have a problem, which is a good problem to have, but I have a lot of VIX calls still. I'm trying to get rid of these things. I can't get rid of them because VIX is staying elevated. It's a good problem to have.
Yeah.
But because of the overnight action, I am a constant kind of state of having to hedge. So we opened down yesterday. We're down almost 2%, before midnight. And so my VIX calls are going to open, vols up a little bit. So I have some other stuff on the hedge, but I was like, I want to get ES exposure a little bit. And so I sold the 4835 put and the 4800 put. It's expiring today. And I used that credit to buy a debit of 5200 and 5300 vertical spread. And the reason I did that is I don't want to lose money if we don't do anything today, but I'm willing to lose money if we go down a lot because of my hedge. I will make more on the total position if it goes down than I will lose. But so I needed to have a hedge to the upside. The thing that's interesting to me about this type of purchase, is to fund one to buy the other, is as I look at this, the market is so whipsaw that I imagine I'm probably going to be able to get out of this at some point today for a profit, even with a hedge.
Yeah. Well, and there's the idea. I mean, this is a directional, right? Trade, but
very directional, very long delta.
Yeah. There's an idea of opening directional trades in both directions and just legging in and out of them, right?
Yeah, I mean, vol's so high, you have to be careful with going long Vega for purchasing those directions. But I mean, to the point, but yeah, I'm with you. And to the point of this type of trade, Dan, what you were saying with like modeling this stuff out and looking at it is, liquidity's, I don't want to say liquidity's bad right now. I mean, it's held up for what this is, but I will say this: one of the things you have to be really careful if you're newer to trading, or if you're not newer to trading and you're just getting excited about the trade, you really have to be careful of watching the bid ask right now, because you don't want to get. I mean, if it insta-fills, it insta-fills, but you don't want to chase to try to get something in right now, because of the bid ask, you could have opened this trade up the way we were moving last night. And if you weren't careful, you're instantly down 5% on this trade.
Easy.
Yeah. And that is a point to remember for not only manual trades, but also automated trades. Like it's just a point to remember. If you're putting a automated trade on, and I'm just talking in general, if you're putting an automated trade on in a day when the market has a 500-point move and a 100-point candle, that is something to be aware of. How is your trading method going to respond to that type of market movement?
Yeah. And someone asked me the strike selection. The reason I did these strikes is again, I'm not a technical guy at all. I try to trade vol, but if my thought process on this hazily in the middle of the night last night was the market really seems to not want to go below 48.30 in the ES.
Interesting.
Like if you look at kind of the overnight action Sunday night, where we've kind of like every time we've been down 100 points today, which I think is like 4,900 in ES.
Yeah,
we're bouncing.
Okay.
And so to me, that shows me, I mean, again, because I have VIX calls, if we break 48.35, I'm going to be fine, because I think we're going to vol is going to go up even more. So I chose that as kind of a line in the sand. This is not my favorite way to trade. I don't trade technical like that. But if you're going to do something, if you're going to sell a put spread, try to get, in this market, at least look at the levels. Look at where we're at. 48.30 is the low, I think. And so NES again. And so that might be a line in the sand. You're picking your spots.
Well, and that's a good spot because in the SPX, 48.35 on 48.35 on Monday, right? It bounced off of there like,
oh, it's fast.
It was like you said, Troy, it was a crash up. And that's why it seems like, I'm saying there's, if you asked me, does it feel like, just based on the market action, not the VIX, but from the SPX, separate from the VIX for a second, do you think it feels like it could be some bottoming or something like that? It has that, yes, I would say it has that potential. But on the other hand, as Troy said, it has the potential. If we go through 49.80, then now we're a whole different discussion. Right?
Then people start talking about 3,500 back from
then
October of 2022, which I'm laughing, but people will start talking about those levels that, again, and just to put it in context, we're at about 5,000. We were about 5,000, 5,100, right? During the flash carry trade unwinding, which was that 20. Was that last year?
Yeah,
just a couple months.
Yeah,
so that was August. I think October of 22, we were at 3,500. So, we're in a time period where as these numbers get bigger, the moves are substantial. The 100-point candles will continue.
Yes,
until morale improves.
Yeah, and
morale has not improved, guys.
No, and I think you got to be careful with this whole. Again, just going for this topic of selling premium. People, you hear a lot of, we're in the 100th percentile. We got to sell. Well, wait a second here. What are you selling? And what are you? To me, I still think if you're going to sell options, unless you do one side, if you said to me, would you rather do an Iron Condor today or sell a put spread? I'd sell a put spread.
100%.
Yeah, because if you sell an Iron Condor, here's what's going to happen. We go up 200 points tomorrow.
Yes.
And you say, Dan, I just got VIX went down 10 points. Yes. And then I say, tell me the other side of the coin.
Right.
SPX went up to him. So how'd you do?
How's your calls?
I'm flat. Well,
yes.
Yeah. So you get all that help from, you wanted what the VIX, but the price movement's going to nick you. So, to me, I would leg into these things or just do, at this point, I would just do the put spread, because now you do the put spread. And right as we, it's interesting, as we started this before the blues song, VIX was up 3.5. Now VIX is down.
Yeah.
Right. So does that mean ES is, as we speak, down 24 points?
Oh, so we've pumped like 80 points during the talk.
We've pumped, and so VIX is.
Futures love the OO show.
The market's listening.
Yeah. Yeah, they're paying attention.
They're trying to improve morale.
Powell just secretly every morning drinks his coffee and watches the three of us.
Jay, call in anytime. We'll put you on the show.
Yeah. But I think I think you're almost better just when these movements, just take one side of something, right? Don't do both at this. To me, Iron Condors it's not that I think you'll lose. If someone put on a 35-day Iron Condor today or 40-day, do I think it's going to be tough to net lose money on that thing over time? I do. But we're talking about making money. And if you're making money, I think picking a side at this point, because you have so much room, even if you're wrong, the vols, let's say you sell a put credit spread and we start going down. The calls are still going to be jacked. You can come in and sell something on the call. There's different things you can do there. But
yeah, no, I think, and again, I think to that point, like a Condor right now, again, It's not trading advice. Do what you want to do. There's people who are trading Iron Condors all day long right now,
And they
killing
love it. They love
They
it.
love it, and they're killing it. So
cheers to them.
Blessings to you.
You're talking 0 day.
0 day, yeah.
Yeah,
Like a longer dated Condor.
Different ballgame.
If Trump came out right now and Xi Jinping and they said, we made a deal, the market will be up 400 points by the end of the day.
I think they'd stop trading for a little bit.
Yeah, it might reverse. Yeah, it might reverse
the volume
circuit breaker.
Can you have a circuit breaker to the upside? I feel like I should know that. I honestly don't know.
I don't know. That's a good question.
Hey, chat, can you help us out? Is it possible to have a circuit breaker to the upside?
Chat GPT?
No, I'm talking to the audience, the chat. This is what the streamers do, chat.
I thought Chat GPT.
I don't have to. So I don't have to Google it during the show.
No, I love it. I mean, but the point is, you were going to, and you saw this actually yesterday a little bit.
Yeah.
It is going to be violent to the upside. And so you don't want to turn a brief minute, hey, vol's going down, yay, to, oh, I'm 400 points in the money on my call spread on the call side.
Yeah. This is your, like you said, the biggest, the only rallies I ever fear are rallies that come out of a correction or a bear market. Those are rip your face off. I mean, Troy, what were we from?
Yeah.
I mean, the high yesterday, the lows the day before was like 400 or 450 or
I believe, yes, I could be wrong. I believe yesterday was the biggest point change in history.
If not yesterday, probably Monday.
It was the day. The last 2 days have been the biggest point changes.
Absolutely. Yeah.
So this to answer your question, this is a crash. This is a crash. I mean, we're sitting here. VIX has gone up over 100% since last Wednesday.
Yes, and it was already somewhat elevated. And
the market has dropped 10%, over 10% in the last 4 trading sessions. So that's a crash. I will say also, I do think, to the point of Dan, these rallies, I mean, you have, and again, this is someone I love vol so much. I'm pro vol.
Vol loves you, Troy.
I am long vol, in my heart. But man, you talk about, I mean, you saw it yesterday. VIX was down 13 points at the highs of the session. I mean, it's going to get crushed. And so it's a good reminder to say what Dan said earlier. If you've got, if you're not allocating that much, do a small position if you want, and sell some longer dated put spreads if you want. This is actually the time, if you're going to sell longer dated put spreads, to do it.
Right? Yeah. Or like you're talking about like in SPX or something, or E-minis.
Yeah. SPX or E-minis or SPY or whatever. I mean,
or and I still like, I mean, I'll probably do it today. Just, again, defined risk.
Yeah.
You can go in June 18 and VIX is 69 days. May 21 is 41 days. You could buy a put, or you could buy a put debit spread. And again, no financial advice, but it's just, you're talking defined risk, $300 or something. And if you have enough duration, I don't care. If VIX goes to 65 or 66, I don't care, because it's duration. So that's why I'm happy. It's like Troy's puts, he can win, but someone, if they have enough duration, and that's the nice thing with verticals. If you have enough duration, I can't remember how many times, like when VIX was low, I buy VIX call verticals debit spreads. I would lose because I didn't have enough duration, right? But the minute those verticals that I bought, and then I give up, and then 2 weeks later the VIX goes up. Yeah. And so you just always, when you're doing vertical debit spreads, whether it be SPX, E-mini, or VIX, give yourself enough duration, and that way you could sit back on a small trade. And, unless the world ends, I think you could have some success in some of these VIX things. But if you'd like to go, like Troy saying, on a put credit spread, I mean, what's a put credit spread different in this environment? You get a little better credit, but you get from here to New Zealand on the downside.
Yeah.
I mean, I don't even know on a 3-watt.
No, I mean, I'm without looking at it, you could probably get a $10 credit on a 4,300 spread
Yeah.
at this point. You know, I mean, it's
Crazy.
and to the point, what I'm saying is like, because we will eventually have a rip your face off rally.
Yeah.
The day that you have that, you will insta close that. Like that spread will go, you will be almost a 90% winner that day.
Yeah.
Because vol will come down and will be up 400 points and it's over.
Which, hey, was that what happened yesterday? Were people starting to close out some short positions?
Yeah, I think the difference. I think
you
the
know.
difference is they had no business being up 200 points because none of this is resolved.
Right.
And
Right.
that's, I'm saying once there's a resolve to some of this, I mean,
yeah.
You know,
the clarity.
Clarity. Yeah. The good news is a 50 VIX is like my first relationship with my first girlfriend. It's transitory.
Wow.
It's not going to last forever.
Wow.
It comes and
so,
goes.
Yeah.
Wow.
And so
A moment in time.
Yeah.
So let me ask you, Troy, let me ask you a question.
Please.
You've got these long puts, right?
Calls.
I'm going to ask a question that the viewers are asking. Okay, Troy's got these long calls. What's his plan for letting a few go? Where would he start selling a few? What's the answer?
So the answer is I had some at different levels, and as the VIX has rose, I've sold those at different levels, and so
I got you. So you're scaling it. You scaled in.
Yeah, I scaled in, and the final boss, so to say, is the 80 VIX.
Okay, so the way you have it is, okay, so this is for a specific purpose.
The 80 VIX calls are kind of the final, like, we are crashing. Like, this is the moment of panic, the moment of like
a limit down type.
Yeah. That's the day I sell those, and
when
I'm
they
happy.
Get to 80.
Yeah, and I'm happy to lose on the way because I've slowly, the other part, I mean, this is a little bit more complicated than just the option omega show, but the other part is I'm selling the contango spread, the backwardation spread in futures to hedge against that as we go up.
So you're hedging. Okay.
Yeah, so I'm locking in profit. I'm trying to basically scalp the gamma of the vol, basically the Volga. I'm scalping Volga, and
you're
in this
short
process.
Vega. You have like a short, I would call it reverse time spread or short.
Exactly.
This sounds German.
Yeah, it does sound. It does.
It sounds like a German strategy, Troy.
Yeah, but listen, guys, I don't like what's happening because the market keeps going up the more we talk.
Okay.
So I want us to end it here, but I mean, tomorrow,
bad vibes. He's getting bad vibes.
Tomorrow, we could be at 5,400. We could be at 4,600. Now, what's funny? I mean, to those who love selling theta, who being long theta, if you had, excuse my French, the big ones, if you had a set on you, we're kind of unched since Sunday night.
Crazy.
Wow.
So if you had Sunday night, if you just sold that iron fly expiring today, I mean, you are probably on cocaine.
Yeah, I was just saying, you have to be numb. You have to be in a state of unconsciousness to sustain that. Yeah,
that's exactly right. So on that note, guys, listen, stay safe out there. Again, the main thing to say today, if you're new traders, is this is a fun opportunity. There are huge opportunities for I mean, that's the exciting thing about these markets. We are on the verge of breaking. I don't think that's me being scary. I mean, I think Bloomberg would say that, CNBC would say that. Like, we're a couple % down from like the pipe starting to break in the financial market. Here's the bullish thing for that. The Fed usually will step in at that point. Here's the bearish view for that. I don't know if they're going to step in with inflation where it's at. Mm-hmm. So it's going to be fun. But the main thing is, don't try to chase a wide bid-ask spread today. Because this market is, I mean, we have fluctuated 100 points since we talked. I mean, like the bid-ask is going to be nuts on the open, especially the first couple minutes. So just sit there and enjoy it, drink your coffee. And like yesterday, there will be opportunities as the day unfolds.
Yeah.
To take positions. You don't have to jump into this right now.
Troy, can I say one quick thing?
Please.
In the world of scaling, and that's an important word in this type of market, for those of you who have your grocery list of, okay, these are the stocks I'd like to buy. These are the ETFs I'd like to buy that have just gotten torched, right? And for those people who have bought, and now they say, wow, even my new purchases have got destroyed. I think it's just, again, you have to have a very clear plan of, okay, I'm going to buy a little bit at this point, a little bit at this point, because the timing, if what Troy's saying could come true to the downside, when do you buy? When do you buy some of these ETFs or some of these cheaps or stocks that are cheaper now than they've been? And I think you just have a very, just like dollar cost averaging. You don't know, you can't buy the bottom, but you just buy a little bit here, a little bit there, and be patient. Patience, amigos.
Oh, listen, I almost bought Apple yesterday on when we were down
a little
bit, and I thought, man, it's a great day to do it. I wouldn't want to touch Apple right now with a 10-foot pole.
Them and Walmart seem synonymous with China, don't they?
I mean, an index. So the fact that they're the ones getting punished. I mean, honestly, I look at I should have had Apple puts. Anyway, I'm going to get mad at myself. All right.